you know how buying a house works in Switzerland? Let's pretend that the house you want to buy costs 1 million francs. First of all, you have to put down 20% as your own capital. There are different ways to provide these 200,000 francs. You can use your third pillar funds. If you have them, you can use your pension fund. Or if you own land or houses, you can use them as collateral. Otherwise, you have to pay in cash. By the way, just yesterday here in Zug, I saw a real estate agency that also accepted cryptocurrencies. Once you have found a solution for your 20%, the bank will finance the remaining 80%, so it will give you a loan of 800,000 francs. On these 800,000 francs, you will have to pay passive interest every year. Today, if you lock in a 10-year rate with the bank, you can get away with about 1.5%, which means that on 800,000 francs, you pay 12,000 francs a year in passive interest. But that's not all, because now comes the part about amortization. The bank says, once you've made the down payment, you have to amortize an additional portion within 15 years, or at the latest by retirement age. This portion corresponds to 15%, which means that each year you have to amortize 10,000 francs. So you have 12,000 francs plus 10,000 francs, 22,000 francs, and you have your lovely little house worth 1 million. Once these 15 years have passed, a portion of the debt will have been amortized, and at that point you will be left with only 65% debt compared to the value of the house. Assuming that in 15 years the interest rates are still at 1.5%, you will find yourself paying 9,750 francs per year to maintain your house. Of course, you also need to take maintenance costs into account. Did you know how buying a house works in Switzerland? Do you have any questions? Let me know in the comments.